Hello all, and welcome to the afternoon portion of today's national workshop, Semiconductor Technology Translation and Hard Tech Startups. I'm Shahedipour-Sandvik, Provost-in-Charge of the State University of New York System. I would like to once again thank our partners, MIT and RPI, for co-organizing this great event together. I want to particularly thank colleagues that have put many hours to put together this workshop. This morning, you heard best practices and lessons learned from thought leaders who are building thriving innovation ecosystems in different parts of the country. You also got an inside take on hard tech investing and tech scouting from blue chip venture capital and corporate investors in this space. This afternoon, we will kick things off with what will surely be a lively debate on technology transfer, the competing models of industry and academia, and what can be done to improve the environment for creating more microelectronics and hard tech innovations right here in the US. Later, we will feature thought leaders at the nexus of universities, government, and hard tech startups. Then we will highlight some of the most compelling hard tech entrepreneurial training and incubation models from around the country. We'll end today with experts from shared facilities and the people that utilize them to understand what can be done to provide better access to these expensive facilities for the researchers and entrepreneurs who are working at the earliest stages of microelectronics innovation. I want to take a minute to talk about what we are doing here in New York to continue excellence in microelectronics R&D and manufacturing. The State University of New York, SUNY, is the largest comprehensive system of public higher education in the United States. With SUNY's 64 campus system of 1.3 million students, 3 million alumni, $1.6 billion in R&D, annual R&D expenditures, over 7,000 principal investigators, and 130 operational startups, and a startup equity portfolio with a total fair value of over $500 million. We feel a massive responsibility to create transformational opportunities in leading edge fields and advanced commercialization of SUNY's inventions for the public benefit. Through innovative academic industry partnership in Albany, New York, known as Albany Nanotech, which includes SUNY's College of Nanoscale Science and Engineering and New York Creates campus. Along with our industry partners, we have been able to create an ecosystem that is recognized as a hub for microelectronics and semiconductor commercialization. Albany Nanotech represents a thriving microelectronics ecosystem that is the result of more than $15 billion investment by New York State, federal and industrial partners spanning more than 2 decades, with a current operating budget of approximately $300 million per year. While these types of sites and facilities take billions of dollars and decades to create, build, and operate, Albany Nanotech is already operational and positioned to scale to meet domestic demand for R&D and prototyping. SUNY's highly unique experience pioneering this successful co-location model between industry and academia at Albany Nanotech positions it well to achieve the large-scale impact that's envisioned in the CHIPS Act and in the United States Innovation and Competition Act. So we are looking forward to partnering nationwide to make sure that we position ourselves to not only for the benefit of the microelectronic industry, but also for social mobility for our students, the massive impact that SUNY has on, again, getting students, as we heard in the previous panel, to go into fields that will end up in hard tech industry. The next session on intellectual property is an especially important one to the nation's competitiveness and national security. Getting this right is essential to ensure that microelectronics or semiconductor technology has the freedom to operate in US and global markets. This translation from lab to fab and eventually into the market for most microelectronics technologies requires capital and time, as well as a combination of academic, government, and industry collaboration throughout various phases of the commercialization lifecycle. In addition, we are seeing more and more established industry players and mid-market companies stepping back from licensing early-stage technologies from universities. requiring the universities to focus on building and scaling market-validated startups as the primary way of commercializing these technologies and getting them closer to market. Given this trend, where we are seeing as much as 3/4 of our new intellectual property being developed by and licensed to startup companies or established small businesses, it is critical we invest in the infrastructure and ecosystem to support these ventures and positions them for success. In order to maximize public dollars invested at the earliest stages of microelectronics research and technology development, and to increase the potential for the successful commercialization of these innovations, it is imperative that academic institutions engage and build strong relationships with the full spectrum of entities that operate across the various microelectronics industries and supply chains. That's exactly why we have mobilized around this effort here today, which has been many months in making. These synergies across academic institutions can effectively accelerate the commercialization pathways for microelectronics innovation at scale by actively guiding and supporting the strategic and scientific vision for government-supported technology development centers and related clusters dedicated to these activities. A truly impactful and thriving domestic microelectronics innovation ecosystem will require targeted investment by the public sector in the form of large, multi-institutional technology development and manufacturing centers or clusters focused on specific technology areas, as well as record levels of non-dilutive government funding for technologies, companies, and projects. This includes everything from basic training and advanced educational programs for innovators and entrepreneurs at all levels to business development mentoring and coaching support, subsidized access to shared facilities and bridge tools, and access to the pre-seed or seed stage investment needed for technology de-risking, validating target markets, and building initial teams early on. The time is now for us to seize on this opportunity to reposition the US as a leader in not only microelectronics innovation, but also manufacturing. And we are ready to work with the people here to realize this vision. And now for our next panel discussion, it is my pleasure to introduce Dr. Stromhaug, Associate Vice President for Innovation and Economic Development at Binghamton University, who will be moderating the next conversation. Now over to you, Per.
Thank you so much, Shadi, and thank you so much, everyone, for putting on this session on intellectual property in physical sciences or in semiconductor in particular, as it is such an important topic right now with everything going on in the world. Just 2 seconds about myself. I'm a former scientist. I did decades of molecular biology research. And after switching to what I'm doing today, I feel like I spend most of my time on clean tech and energy. So why not moderate a panel on semiconductors? So I will ask very naive questions, so bear over with me there. Binghamton University is one of the flagship campuses of the SUNY system, but we're also one of the smaller ones present here, I think. And since I took over the office here for tech transfer in 2013, we have tried to transition from the tech transfer old style licensing method into realizing that that doesn't work as well anymore. We need to have a full suite of programs and incentives and resources if you're going to commercialize these technologies. So we spent the last, I would say 5-6 years building up incubators. We have 2 incubators. We built up a lot of programming, fellowships, in a small investment fund, prototyping funding. A lot of this funded through grants with that realization that technologies don't commercialize themselves. And if you go to the autumn annual meeting, and I assume many of you go there and it's just coming up, for a decade now at least, there's been a very, very intensive discussion about how you commercialize technologies in the physical sciences space, because it has become more and more difficult to make that happen. And even so much so that questions have been asked if should we actually file as many patents in this space, or is it not worth it? So in order to see what the state of our industry is today, we have assembled a very strong panel for you who knows much more about semiconductor commercialization than I do. So we're going to give everyone about 2 minutes to introduce themselves as well as their organization. And then if you have some time, just talk a little bit about what the state of commercialization of semiconductor intellectual property is in your organization. So 2 minutes. First one out is Craig Cook, General Counsel at Rensselaer Polytechnic Institute.
Well, thank you, Per, and I'm glad to be here, and I enjoyed this morning's session. You know, I grew up in the Midwest. I actually grew up in Iowa, and who knew that I would end up spending most of my career around microelectronics, but it seems that I have. I'm the General Counsel at Rensselaer Polytechnic Institute. And I've been here for about 5.5 years. Prior to that, I was a lawyer with IBM for 21 years, and I spent much of my career at IBM representing IBM's microelectronics division, also our technology, IP and technology division. So I've spent a lot of my time around that. And, you know, here at RPI, we're very proud of what we're doing in the terms of innovation in the hard tech area. We have, for example, we have our Center for Materials Research and our experimental clean room. We also have, thanks to a partnership with one of our major corporate partners, IBM, and with SUNY, the largest supercomputer of any private university in the world. Work we've done in this area. You know, intellectual property and the way it's protected through patents and copyrights and other means has historically been justified as an enabler for innovation. And even in the Constitution, you know, it says to promote the progress of science and useful acts, the Congress is empowered to secure intellectual property rights. So it's been viewed historically as an important area for innovation, but you know, in particularly in recent decades, some have viewed it as an obstacle. And there's some really important reasons for that. I think they've been mentioned to some extent. One is pure volume. Last year, I think something like over 370,000 patents were filed in the were issued in the United States. Probably much more than that filed, actually. And so, you know, there was a time in history at the big companies, before they put out a product, they would actually try to do an adverse patent search to find out if they were infringing any patents. Well, that ended years ago. And frankly, for some of the newer companies, it probably never ever started because they just didn't see any point in it. And when I say newer companies, you got to remember, I'm from IBM. So I think of newer companies as companies that came around in the 80s and the 90s, right? So bear with me on that. But look, is IP an enabler, or is it an obstacle? We're going to talk a little bit about that, I think. But you know, we did learn some things. And I think somebody in the prior session mentioned this. We did learn some things in the open source era, and you know, I was involved with IBM in the early 2000s, working with companies like Intel and with HP, working with the Free Software Foundation on the next version of the so-called GPL license, right, for software. And what we learned was interesting. What we learned was that innovation, at least in the software industry, where you didn't have high entry barriers, innovation didn't necessarily depend on, you know, all these exclusive rights, right? I mean, people were able to utilize things like open source and still innovate on top of that. And what was also interesting was, though, that it wasn't like the open source movement was anti-intellectual property. In fact, the open source movement leveraged intellectual property. That's how the GPL and the licenses in open source were able to democratize, if you will, some of this software, and eventually, to some extent, commoditize some of the software. But then companies came along, they innovated. Red Hat's a great example. Look at a company that built its platform on an open source Linux and is now a major player in the world. So look, startups, it's a difficult time for startups, and we're going to talk about that. But there's some models that say that that intellectual property can be their friend and it can be their foe, and we can talk a little bit more about that. But I'll stop there and turn it back over to you, Per.
Very good, very good. Next up is Lesley Millar-Nicholson from MIT.
Thanks, Per, and thank you, Craig, for that backdrop as well. Thanks for inviting me to be on this panel. I'm Lesley Millar-Nicholson. I'm a director of the Technology Licensing Office at MIT. I've been here for just over 5 years, and I had the privilege when I was a technology manager and director of the licensing office at University of Illinois to manage the portfolio of Nick Holonyak and Milton Feng, known as the inventors of the LED, and also after that, the transistor laser. So I have some experience in managing a very large portfolio and understanding the complexities of the semiconductor market from the licensing perspective. But here at MIT, as many of you know, we're a fairly prolific university in many ways. We have over 11,000 issued and pending patents. We get about 400 patents issued in any 1 year. We are licensing at the rate of about 130 or so licenses and options. And there's a significant number of those licenses that go to startup companies. And in our portfolio, as I describe it, of startup companies, I think over 500 startups in the last 20 years or so, over 70% still exist. Now, some of them have not continued with their agreements for good reason. Agreements expire and the like. But as you've all talked about in the prior sessions, the strength of the ecosystem to support startup companies and to help get technology into the marketplace is absolutely vital. And that's one of the reasons why the engine was created in Cambridge, to actually recognize that hard tech needed more patient capital and that there were many more complexities, in some industry specific and some technology specific, that needed to be addressed. And so the engine is a good example of the sorts of things that need to be put in place. With regard to the other companies that we've seen, I think we've got at least 15 startup companies in the semiconductor area that have great success. And what I noticed when I was looking at the licenses, that only a few of them license one single technology. Many of them are licensing portfolios. And I think that's really important to think about as we look at where these are coming from, because it is not a technology that's just being picked off by an interested investor. It's actually built on the back of years and years of research from perhaps a singular PI or a number of PIs labs. And those are the conversations we can get into when we talk about how does the academy, how does industry, how does the government help get these technologies into the marketplace? And then I want to give a nod to what Craig mentioned about open source and software. We are having to develop our skills within technology licensing offices to understand the other complexities that come with trying to license this IP and not being drawn into the expectations of what licenses used to look like, and thinking in a very creative way about how to meet the needs of industry and meet what is our goal, which is to get as many technologies into the marketplace, into as many hands of customers and consumers and partners as possible, and not be focused, as somebody alluded to in a prior panel, on the amount of money that we're bringing in order to help university endowments.
Very good, very good. Thank you, Lesley. And finally, not the least, Todd Younkin of the Semiconductor Research Corporation.
Thank you, Per. And can you hear me? And can you now see a couple slides? I'm less adept at speaking freely, but I've provided my contact information here. I'm the third CEO of the Semiconductor Research Corporation. We're celebrating our 40th birthday this year. So we're really excited at some of the questions on, what does the semiconductor landscape look like in 10, 20, 30, 40 years, and how can SRC contribute to that? For those that don't know, we are more than just Intel sponsorship. We have 26 companies, and that's cooperativity and the mix of people and technologies is really one of our strong assets. But if you look on the left-hand side, we have 900 industrial liaisons that interact with 2,000 students and faculty. So it's through those collisions and through that portfolio that Lesley just talked about where the magic happens. And what we've seen is that that the technology needs change, the location where those expertise change over time. Some of that is now available internationally. Those are important dynamics as we look at the semiconductor industry and the U.S. and like-minded nations. And our mission is a lot like Incutel, like Eileen talked about this morning. We basically hold together government, academic, and industry. And while we are an industry-led endeavor to do industry-led R&D, it's really the magic is in bringing these folks together across very difficult boundaries that define some of our actions. You know, when we look at it, we're TRL 1 through 4 in most of our program structures. And so maybe that has different considerations since we're looking at university research and university to seed investments than you might be thinking with an NSTC type endeavor at a TRL 5 or 6 type initiative that has different IP and different startup constraints. We have 3 sort of pillars. We are semiconductor technology leaders, and if you haven't seen our decadal plan for what we need to do this decade in order to be positioned for 2030 and beyond, I encourage you to look at it. I've also, as a new CEO, issued 2 other things, a broadening participation pledge that calls for a diverse student pipeline because the talent is priority number 1. And the fact that in order to get through to the next generation of students, we've got to be driving eco-considerate processes and systems, and we've made a commitment to sustainability to get at these really academically hard problems that are important for our planet. So if you're not like MIT with the 10 active research projects, or SUNY with 8, or RPI, with only 1 right now, and you're not familiar with our IP terms, you know, what should you know about me? It's that our tasks are meant to move from basic science into development. They're meant to be novel and free of blocking background IP. I think faculty have good ideas. They can bring us an idea that doesn't have encumbrances in the background for us to build on. Our model follows a freedom to practice for members in the research programs that they're contributing. And that's basically a non-exclusive royalty-free or NERF license to give the members the ability to access that issued patent in both internal R&D and commercially in the future. And remember, we're 5 to 15 years down the road, so the level of clarity at this point in time is pretty small. Those issued patents are still owned by the university or the faculty inventor, and they can be licensed further. And in fact, where SRC can, it provides the financial substance for those patent issuance and maintenance. Our patent disclosure process, it really focuses on those novel and non-obvious technologies that fill out that portfolio and keep our faculty and our research at the forefront of innovation. And I can see that basically because they're quickly issued and don't have a lot of prior art claims. And as mentioned by Craig, Lesley, and Per, we're really an open innovation platform where the vast majority of our work is publications into the open domain, the creation of open source software, and increasingly the utilization of open source hardware to drive academic concepts and increase the rate of information turn, which is honestly a problem in the microelectronics ecosystem. And the last thing, without giving away details, you know, we can encourage and see successful startups with roots or ties to SRC research and researchers. And maybe to put it into context, from the year 2000 to today, you know, what have we done? How many patents are out there? Just so you can kind of get a scale. You know, the first is we've invested $1.3 billion in university research over that 22-year time frame. And you say, so what? Industry spends $40 billion and government spends $6 billion a year, and it took you 22 years to amass $1.3 billion. Well, we must be doing something right, because I'm here on this panel representing thought leadership for semiconductors, even though we have a fraction of this not-for-profit budget. That's given us 4,100. What's that? Can
we speed this up a little, Todd?
Yeah, 4,100 research projects, 2,500 faculty, 12,900 students, 1,500 invention disclosures. That's $1 million per pop. 826 of those went to USPTO, 561 issued patents, 327 active patents, and 58 universities share those. So when you look at it, we've put 55 cents of every $100 into patents, And our NERF IP terms are really about honoring the commitment of the dollars that went into the system to support the ideas and providing a safe space so that industry insight and emerging state-of-the-art can be shared with those faculty. Thanks, Per.
Yes, awesome. So a lot of good impact there from all of you. So, but is there sort of a disconnect between what how industry view intellectual property and what's needed for them versus what universities view as important to the university if they want to commercialize technology? So, is there sort of a what do you say, Lesley? Is there a difference of opinion on what's needed?
So let's jump right in there, shall we? So there is absolutely a disconnect, and we've had short prior discussions, and I'm sure this discussion will go on after this panel too. Is the concern and the fear, and I will say it is a fear as a real word and a real thing, that the non-exclusive, royalty-free, sub-licensable fully to affiliates of all the members will somehow constrain, and does constrain, I think, and it's shown out in the numbers, a faculty member or postdoc or whomever from the research labs feeling as though they have the confidence to try and go and raise funds on the back of that intellectual property. Understanding what you said, Todd, and I appreciated you putting in about you don't want background IP in there. Please amend your statement of work before you give it to us. I don't think that's well understood. So I'm sure you see a lot of revisions, but therein lies the issue, is that often then, because of those non-exclusive sub-licensable agreements, that there is limited startup company activity. And if I'm wrong, please, I'd love to see the numbers. And therefore, the universities will not patent on their own. And if you don't want to support it, then there goes some IP into the public domain, and we should all go whoopee-doo, everybody can get access to it. But I think the investable intellectual property is effectively lost.
How does industry view that, Todd? I mean, you touched upon it, but I mean, it seems like we have different sort of motifs here a little bit.
Yeah, I mean, I would say it this way. There's definitely a need for universities that work with us to understand both the letter and the spirit of the law and to educate themselves on what we're asking. I view that as a mutually beneficial thing because, like Lesley said, that means less revisions for our small not-for-profit when we're contracting meaningful scope. So happy to find ways to improve an understanding of what we're asking for and what we're doing. I'll give you a story that I think is a little bit powerful. We recently ended a faculty research award because they had not put any students on the research that we could see. And so we just basically said, look, we can't see any activity on the students. You must be doing your work elsewhere. And for obvious reasons, I don't want to give away names. And that person called me up and said, look, please don't cut me. I have plenty of money. My startup's fine, but I need the insight that you and your community provide. And, it's hard for me to illustrate the community relationship that's created on the backs of the simple NERF IP concept and the value that it creates for those performers. Now, I will say universities where the person is a professor and they're also the CEO of their startup, and sometimes the CEO is their primary title, they can do a better job of making it clear to people where their interests are being served in one space or another, and not blending the two. Because I think that, my graduate advisor taught me that perception is reality. And where there's a perception of a conflict of interest, it creates real problems, not only for that person, but for others, with good intent. So sort of to recap, I welcome any education on our NERF IP rules, which will not change, and the academic performers that are interested in working with SRC on the future. The second is there's a level of insight here that I think is being provided that's not factored into this equation for faculty and startups. And three is, well, frankly, I forgot my third point.
You'll remember, that's fine. So sort of to follow up on that, Craig, because you started with IBM for 20 years. So that's sort of the big one in the room here. We're not going to call him something, but then you switch now to doing it on the academic side. So have your view or thought process around intellectual property and how to bridge this, has that changed over the last, since you did that switch?
I don't think it's changed, Per. I think, fortunately, having spent that much time at IBM, I do try to have an insight into what businesses care about when they do intellectual property licensing. And I think back, I'm kind of in the middle here in some of my thoughts anyway. I think back to the open source again and realize that when we started looking at open source at IBM, we were extremely nervous about it. You know, even us button down lawyers at IBM, even though I was a young lawyer when it started, we didn't like this whole thing. But we realized at some point it has a place. And I think it's not for everything. It has a place. And I think that's the way to think about working with the SRC, working on NERF type of licenses like this. You have to know, if you're going to do it, what you're getting into and whether it has the place in your portfolio of innovation and licensing. We're not going to do all deals like that. No one would expect us to. We're going to get royalties in some of our deals. With startups, we're going to maybe we'll do home run clauses, right? Where you give them a chance to be successful, and then you get something if they are successful and when they're successful, right? So we do all kinds of different type of licensing. What I think is important is having everybody at the university understanding what you're doing and what your interests are, and being flexible to be able to negotiate the kind of terms that make sense in that situation. And so, yeah, no, I don't like NERFs either. I don't like, but just like open source, I mean, it has a place and you have to understand that, but you have to also understand where it doesn't have a place.
I think one of the issues there is that when there is agreements with NERFs, universities could get maybe don't want to pursue patent protection because they feel like no one can then commercialize it because you don't have that strong protection. So is there a way to bridge that, or is that sort of a misconception? Do you need to have that sort of broad, nice patent protection, or can you start companies in this space without it?
If I can comment. I mean, we like to make sure that when we can, that we're going to get our patent costs funded. It's expensive to go through a patent process, right? I don't know, $15,000, $20,000 it can cost in some cases to get through a patent.
Me too, for issuance and first maintenance is our average sort of lift for an idea.
Right. So we're looking, even in where we give NERFs, we're looking for funding that covers that process if we're going to have intellectual property. And I think that, I'm guessing Lesley would say the same thing from her perspective. We're going to look for some funding there. Not always, we don't always have it. We filed a lot of patents we file on our own dime. But where we can, and we have a partner, we will look for funding for that. With startups, it gets a little harder. They don't have the cash. So we will, again, maybe we'll spend our own dime on it. We will then try to recoup it at some point when they're better positioned to be able to provide cash to do that if we can.
So, Todd, you said something interesting in our last meeting, which was that you would like to see more startups too. So what's your path there to induce more startups based on the portfolio you have?
Yeah, that's a good question, Per. I'm looking at the CHIPS Act funding like everyone else. And, you can look at our member base and you can say, okay, well, you're a billionaires club of the 26 largest semiconductor chip makers. Those things are true. It doesn't mean I'm not talking to startup companies that have both been created out of SRC research and outside of SRC research. But again, their interest lies in a different technology maturity space. They don't have a lot of capital, like Craig just said, to invest in the R&D. Right, so whatever the CHIPS Act can do to lower the barrier for inclusion of startups and incentivize them, and not just make it yet another SBIR activity, right? That won't yield. But whatever they can do to help us, to help Craig, to help Lesley, attack some of these in a critical mass way. There's not a one-size-fits-all solution for open or protected hardware and software. But I'm confident that with added resources, we can find the right balance to serve startups and create some mojo.
Can I add to that, Per? All of the panels prior to this have brought up so many great points that speak to some of these issues. Eileen mentioned the wider valley of death for hard tech semiconductor startup companies. And I think that's a really important point. And the chap from Intel talked about their approach with Intel Capital of different sorts of investments. He mentioned equity investments, strategic investments, and ecosystem investments. And I think we have to remember, and some of our questions were going to be around what can government do, what can the academy do, do you choose startups or corporations? This is not a zero-sum game. These are not mutually exclusive. We all need to be together to work out how to take both corporate dollars translated through research at universities into technologies through their partnerships, and federal dollars through federal funding in research labs, and get them into the marketplace. And to think we can do that singularly or with just one dime is unreasonable. And this is the struggle that we have. And, we talk about what does industry need to know about the academy? What does the academy need to know about industry? We need to know the constraints we are under. To Craig's point earlier, we don't have free money just to spend on patents to give people nerves. So we will not do it unless it's going to be paid for. Do we have confidence if a large company has access to it that will get somebody else? Probably not. So these are the decisions we're making, not just because we're being silly or short-sighted. It's like factual budgets. We recover it at MIT 65 cents on the dollar for every patent that we file. That's a really good rate. Yet I'm still in the hole $10 million a year. And you know where that is recovered from? Our departments and our labs. In order that we can do that. Other universities are surviving on $250,000 a year for new patents. That's unconscionable for advancing our innovation. Those are the sorts of things we need to address if we're going to make a mark, whether in semiconductor or other industries.
We have a question from attendee here, which sort of tags along with what we just discussed, that there seems to be a difference in the IP that the company would like to see versus what the university would like to see if it's going to enable a startup. So, what should IP look like, Lesley? If you say, yeah, I'm going to file on this because I think this is going to be a foundation for a startup.
I've spoken enough for the past 2 minutes. I want to give my other two panel members an opportunity to speak as well. Otherwise, it will be the Lesley show.
If I can comment, I'll just give my 2 cents worth. I think that startups, I think IP is important to them. They should have some IP that's unique that they can use, right? That doesn't mean everything. They can use open source. They can use, some of this freely licensed type of IP, but they need something that's innovative for themselves. Otherwise, somebody's just going to copy it, right? So from the academic standpoint, I think we want to help that. We want to help them do that. Yes, we'd like, if they are successful, and so many of them are not, but if they are successful, we'd like a little participation. Nothing that would harm them in any way. But we want to help them get going. And I think one of the things that particularly in hard tech industries, I think startups are fearful of to some extent, is two things, really. One is their fear of all this IP out there that they don't know about. Somebody could come in and try to stop them from operating because of the huge amount of patents that are out there. So they're a little bit worried about that. The other thing they're worried about, and somebody mentioned it earlier, is slowness. And we can do a better job in academia. We can do a better job, frankly, in industry, but we can do a better job, certainly in academia, being faster about getting these IP deals done, getting these license deals done. We need to move quicker. And that's the one thing I learned at IBM. Delay kills deals. And I bet almost everybody on this listening as an attendee understands that very, very well. So we need to be faster at universities. We tend to think a little slower at universities. We tend to think a little more longer term, but we have to understand that we got to move on. If we're not going to get it done, we're going to move on, but we need to get it done.
So I think something Todd said regarding that large companies today may not even look at the landscape. If you're a startup, though, you have a bigger problem in that a large company can easily come and go after you. A startup cannot do the opposite. So how do you advise companies on that if they're going to take a license to a hard tech?
Well,
Go
ahead, Lesley. Go ahead, Lesley. No,
well, I was going to say, it's a marketplace, and ultimately, one would like to turn adversaries into partners by them being the company of choice for a strategic investment or for an opportunity to access the IP through a merger or acquisition or something like that. Every startup company, and I agree with what Craig said about speed. But at the same time, these are legal contracts, and every company needs to do its diligence to know and to make sure that the IP it's getting is sufficient for what it wants to put on the marketplace. And there are risks to that. You might overlook something or the like, and it's a grown-up game. So we need to make sure that we give all of these partners as many tools, and this comes back to the people, the training of the people and the ecosystem and the entrepreneurs. Some of the best scientists are not going to make the CEO. We need business people. We need people understanding the technology in the companies. And that speaks to all of the things that have been discussed on the prior panels as well. It's not just the IP. These people are investing in the companies, and the strength of the company is the technology plus the people.
And I think just to add to that, the investors and the VCs know this. Look, you're a startup. You can't tell a startup you got to sort of slow down and be sclerotic because you're worried about somebody suing you for intellectual property. You just have to move forward, and it's a business risk. It's all understood. There's hundreds of thousands of patents out there. You just have to move forward, and you have to take it on as a business risk. There's no really other way you can answer that question if they're worried about that. If they know of something, they can try to see if they can try to work a license out, but typically you don't know. You just got to move forward. Get your own IP the best you can and move forward.
Any last word of wisdom, Todd, before we close?
Just can't stress loud enough how important it is for the years ahead for us to find ways to reinvigorate hard tech, not only as a nation trying to stay relevant to the next industrial revolution, but also, for the semiconductor industry and the health of that industry. And the board hired me as the new CEO with that mandate. I'm trying to figure out how to do that, without upsetting the ecosystem too much. And really, look, I'm excited that there's new energy and hopefully the promise of new dollars coming in to revitalize this community.
And that was unfortunately all the time we had. I think we could have gone for another hour easily and maybe had some good discussions. One thing I would have liked to talk about is how we can get the large companies that Todd represents and the small one that Lesley and Craig represent, and how do you make them actually work together to get some of these technologies commercialized? Because I haven't seen enough of that, I think. But that's all the time we have. If I could
just add a real quick word just before we leave. I just want to make this point. It is so important that we realize that innovation in academia is a worldwide effort, that we need people from all over the world. We need domestic students. We need international students. We need to collaborate internationally with all of this stuff. And I know that's not so much an IP thing, but I just wanted to make that point from an academic standpoint.
Very good. Thank you so much, everyone. Thank you to the panel. Thank you to the listener for staying tuned for so long. And I will now hand the word over to Professor Bob Karliczek at Rensselaer to facilitate the next session on stakeholder perspectives, universities and governments. So thank you so much, everyone.
Thank you.